The strong movements in the energy market, gold and silver and all the other commodities came to a halt, but is this only the calm before the storm? Let's have a closer look and see what is coming next. Yeah, we have so many influences currently in the markets. The geopolitical situation, of course, the price inflation we see all over the world. So why are we checking the charts for our next trading idea? The reason is that I want to know what all the market participants are thinking about all the news. Of course, the news are driving the market. That's not a secret. However, what direction and how strong it is giving us an idea how the market participants are willing to react on the next news. And this is helping us to have an early entry and to reduce risk while trading. I want to start with you with the energy market, and for that, let's check CL. That's a symbol for the light sweet crude oil. You can also have a closer look to WTI, which is the same product roughly. And we can see that we are still in the upward movement here. I can take away all these drawings here, and you can see this is a strong move. Is it a strong movement to the upside? To be honest, I don't think so. It is moving upwards. Yes, nobody's doubting this. However, all the setbacks we have here, we have so many overlappings. And this is not a typical strong market movement. You can see it easier maybe in the 4-hourly charts on the lower time frames. You can see that this is not the perfect movement if you are wishing or thinking of a strong bull market. This is giving me the idea that on the bigger time frame, daily chart, 4-hourly chart, we may expect this is only a corrective pattern, a counter trend movement, which should lead in the aftermath to a continuation once more to the downside. Not necessarily to zero again, of course not, but I think this is not a really typical one to be convinced, super convinced that the market participants are willing to buy. As we have some quite strong movement here before that, I would say something like an ABC pattern here is the best you can think of in this situation. However, having a closer look at the 15-minute chart is absolutely not giving us this impression, because lately the latest moves are strong to the upside but only shaky to the downside. And as soon as the market is breaking these overall or these intermediate high here, which is roughly 120, quite exactly, it's in June, in the early hours of June the 6th. When the market is breaking this level here, I would expect that the market at least once more will continue to the upside to give us something like a 1, 2, 3, 4, 5 wave pattern to the upside. And then we may have a new decision whether the market will turn or continue once more. Maybe once more with something like an overlapping pattern, because even something like this and with a setback would also give us a setback below this one. So you can see so many setbacks here overlapping. This is not giving me a good mood for buying is the only opportunity. So if you are a short-term trader and trading intraday, you may have a closer look at these patterns here. You had roughly the same idea here. This one and the shaky one here, overlapping patterns here, and the expectation that the first part here will come again. And you had this. So this is something on a lower time frame which worked quite well, and which is giving you some kind of an input what you can expect. If you have some overlapping or an ABC pattern, you can expect that something like this will continue in the aftermath. Maybe it's a little bit longer, it's a little bit shorter. Typically it's the same length roughly, or even longer, and everything into the same direction of the main trend, which was here on the lower time frame for the bullish side. So I think it's once more bullish as soon as the market is breaking the $120 line here. When the market now is not doing this anymore, if the market is continuing here to lower grounds, then of course not. But because we were not triggered at that level, so this is not a reason to buy the market. So I would not recommend to buy at that point, especially not with the overall pattern here, which is giving me the strong idea that this is only a corrective pattern. And I want to switch a little bit to another contract now, not to crude oil anymore. I want to switch to gold and keep this in mind what we have here. It is an upwards movement, and it is looking something like a corrective pattern here. And we switch now to gold. We will have a look at gas later. So if you see this one, this is also roughly the same situation we had here, with many counter movements here, all overlapping. And this is normally not a perfect situation for a bull side. Setting back, always setting back. So this is roughly the same idea. So you can see that this is a typical behavior, not so much related to one single contract or one single market. You can see this kind of pattern in so many markets. So in this case, in gold, it was the same situation, and you had roughly the same strong movement down, shaky to the upside, a continuation to the downside, and still something like a target around 1700, maybe 1600, maybe even a little bit below, because of this typical flat pattern, which is still valid. It is still possible that this will occur. So if I have a closer look at the lower time frame here, let's check what we have here on the 4-hourly chart. From that point here, this is the lowest point we have seen here. That is the same point here. And you can see setback with overlapping, again setback with overlapping, even internal structure. So we have a lot of corrective patterns here as well. So I have a feeling that this is still something corrective. It should look, if it's a strong movement, it should look like this. Strong setback, yes, of course. Also a strong movement has a setbacks, another strong movement and a setback, and another, something like this. So you can see here we had something like this and something like this overlapping free. Only then we had something like a bigger sized corrective pattern and a continuation here to the downside. In this case, there's still some hope that this may lead us to higher grounds. However, in case the level here from 1st of June, in the early hours of 1st of June, depending on the time zone you are living in, it is something around, let's say, 1827, roughly, this low in between. Maybe some kind of a trigger for selling short the market. As long as the market is, or the prices are staying above these levels, I would not necessarily recommend to do so. However, when the market is plunging through this level, I think chances are getting way better for selling short this market. And of course, you can try to find similar situations on lower time frames. So if you have something like this, then you can of course also use things like this, some levels here, to sell short this market. Maybe we had something like this a few minutes before, because this was a quite strong movement, and this is still some quite corrective pattern. And we had some break of this level, or at least reaching this level. When the market is breaking through this level, I would think of a continuation to the downside, which may lead us to another break here. So on lower time frames, it seems to be something like this also. So then the market is indicating that short selling might be an opportunity, as long as the market is breaking through these points here on the low end, which is roughly, if you cannot see this, 1850, 51, something like this. It was daytime or early in the morning US, or daytime Europe, 6th of June. So it was today when I did the video here. So you can see that we have many indications here for a selling short market in the bigger picture. And also in the smaller picture, it is indicating that the short selling might be a good option here as well, to lead to roughly these levels here, 1700, maybe a little bit higher than this one. That's not necessarily need to go there. However, you should expect that the market is going into this direction a little bit further before turning around and giving us a good hope for higher prices, as long as you're willing to buy this. So I think we have currently not the best situation to buy this market. I would change my mind a little bit if I have something which is looking like a really shaky movement to the downside here, way more than the upside. So that I can say, yeah, this is not looking perfect for the bull side, but this is even looking worse for the sell side. So if the market then is breaking through the intermediate highs here, I would say, well, in this case, maybe buying is an opportunity. You may be wrong if you're triggered here. Maybe you're triggered at the lowest point here, but you should not forget, if the market is continuing, you will have quite a distance of a moving market, and maybe even beyond this. So you might be wrong when entering the positions at one of these trigger markets levels here in this market. However, the risk-reward ratio should be in favor to you. So even if you are wrong with one decision because triggered into the market and it did not went well in this case, you should think of the risk-reward ratio. In case this is continuing to this level, you can expect something below this level and into the low 1700 or even 1600 grounds here. So you have something like a risk-reward ratio which is helping you to enter the market. And if you're on the right side, you can earn more money than you risk if you're not on the right side. Switching to silver is roughly giving us the same impression, because this is also not super convincing for the bull side. However, to sell short this market, I would wait for a break through this level here, which is roughly 2142-ish, somewhere around this level here, early in June, end of May. The lows we had here. If the market is breaking through this level, I would say, okay, once more we are leading to lower grounds, maybe even to 20 or maybe roughly 19, but I see a strong resistance here. So I think silver, other than gold, has a good chance to come to an end soon. However, what I see here is not super convincing currently, because you can also see here, if I zoom in a little bit, that this part of the market is not, so much overlapping here, which is typically not convincing for a buying market. However, selling now is not a good choice. If you want to sell super early, you may at least have a closer look when the market is reaching these levels here. Maybe, I'm not sure, to be honest. Let's try it out by together here with Fibonacci. Yeah, where is it? Here. Maybe around these levels here, there's a chance for a turning point. I normally don't recommend to sell short by just reaching a level. I want to see something like a confirmation, which may look something like a sharp movement to the to the downside. I can draw it here. If you are reaching this level, if you see that we reached this level and the market is doing something like this on a lower time frame, 15-minute or half an hour or whatever it is, on a lower time frame, then you can sell short at that levels here as well. If you don't want to wait so long, you can wait for this one. You can also do this if you want to secure some position. If you're a buyer, a holder of silver, and saying, yeah, I don't want to suffer from falling gold and silver prices, you can of course sell short some kind of a contract just to earn some money and keep your physical positions. This is just something to hedge your own portfolio and to keep sure that even in a worst case, it is not super expensive for you. However, I think I see a good chance that the market is at the very end of a short market, of a selling market, and coming to an end soon in the big picture, which may continue maybe for 1 or 2 months, or maybe even a little bit longer. I'm not sure, to be honest. But for a while, I think the short selling side should be the better one. But after that, I'm quite convinced that we get something like this again here, and that we can expect gaining prices or rising prices here as well. Currently, I think it's too early. If you're a physical buyer, maybe you can think, yeah, buying here or there is not a big deal, not a big difference. I can buy at both levels. I want to have my positions. It's okay in my eyes. If you're a trader, a little bit more short-term orientated, then I would think waiting for the bull side is a little bit more recommended than selling, than buying at that point here. I think you have a chance to get it cheaper later and to sell short in case the market is breaking these levels here. What is turning my opinion? In case the market is doing a strong movement to the upside. In this case, this does not typically look like a short selling pattern. I would wait for some kind of setbacks, or even better for a bigger setback here, and I would buy again at that point. And you can see, of course, it's not the same price level. However, buying here or buying here is roughly the same. It's not a big deal from the percentage, from the price here, side. But on the other side, it is a time you can use your money in a different way, and you have some extra confirmation that this is really a weak movement to the downside, which is convincing me much more that buying is the better opportunity than what I've seen here. We skipped natural gas because we wanted to compare crude oil and gold, some kind of a pattern there. However, natural gas is not giving me a good feeling. Currently, I think that both sides, the bullish and the bearish sides, are not sure what they want to do. This is a typical ABC pattern, which is giving me an idea that this is a counter movement and we should expect a bullish movement in the aftermath. However, we had a quite strong movement to the upside, but most of it was lost again in this setback here, which is showing me that the bulls are not super confident anymore. However, the current picture seems to lead us to higher ground, so I would expect from the very moment that we will see new highs soon. That's my preferred direction. And also lower time frames are indicating that the strong movement seems to be to the upside. If you want to buy something like this, no matter whether this is a 15-minute chart or 4-hourly chart, I would say wait for something like a setback, a corrective pattern here. Then you can re-enter the market, or as long as you see something like this, you can stay in the market and waiting for higher grounds, because it seems that the market is still pushing upwards. Having a close look at the euro against the US dollar on a lower time frame, we see some kind of a stock, or the bigger time frame, I'm sorry, you can see some strong movement to the upside, and now it might be something like a shaky part here, which typically, if this will occur, is leading us to higher grounds. And this might be the biggest danger for all the commodities, because when the US dollar is weakening, and this price movement here is indicating that the US dollar is weakening or the euro is gaining strength. However, we have this pattern with the US dollar and other currency pairs as well. For example, British pound against US dollar, it's roughly the same. So you can see that most of this movement is part of the weakness we currently have in the US dollar. It's not a strong weakness, however, the movement is quite strong. And this is giving us an idea, maybe if you see something like this, this can give us some gaining prices with commodities. So if you see the market is now coming in a corrective pattern and breaking these levels here, then you can expect that the currency pair is still rising, which is indicating that the US dollar is weakening a little bit, and this is giving a partly good influence for the commodities. So this is helping maybe oil, silver, crude oil, whatever, to see higher grounds. However, the next days or maybe weeks might be indicating some kind of a weakness, which may lead all these contracts I've mentioned before to lower grounds first. Last but not least, Bitcoins, because many people are asking me what shall we expect from here as well, and the big picture did not change in any way. We still see that this is the first part here of the down movement. The same part here would lead us roughly 15,000, 12,000, something around that level. If it's only in a percentage way, this is 52%. If you have 52%, it should even then it should lead us to 22,000. So I would normally expect that the market is coming down once more. So to see something like this here in the movement, here in the back part as well, Currently, it seems we are just in the fourth wave here, first, second, third, fourth, and waiting for the fifth wave to the down area. Maybe not necessarily to the lower end, but somewhere around this area here. And seeing the 4-hourly chart is also giving me not the best idea that this is a strong market here as well, because the market had some thing like a corrective pattern here. Now here again a setback overlapping with this one. The first part was also more or less ABC pattern like. So I think chances are quite well that this is just a corrective pattern, which is indicating this theoretically or this practically, which should lead us for a last movement to the downside here, as mentioned before. So something, maybe we are gaining a little bit higher. I would not be surprised if we see 34,000 first, but from that levels somewhere, I would expect that the market is taking the last push to the lowest end, which would be really, really typical for a typical price movement pattern. It is not a given fact, so I would wait for selling short until the market is breaking through important levels. The last one is maybe that one from May 26th. You can see here at around 28,000. Or you can wait on lower time frames when the market is doing some 5-wave movements to the downside, shake it to the upside. This would also give us an idea, an indication to sell short the market once more. So that's it from my part. I hope this is helping you, giving you an inspiration how to look at the market on your own. Maybe this is helping you for your own trading decisions. Stick with the market, have a closer look. Whenever you see these kind of patterns, you may have an idea what the market participants are thinking, what they are doing, and please keep in mind, stick with the flock. Don't go alone and say, I know better what is happening next. Take the opportunity and go with all the other market participants and say, if you are selling, yeah, I'm coming with you. If you are buying, yeah, I'm coming with you. And the ideas I've talked to you before may help you to have an early, not the first entry, but an early entry, so be with the first half or the first third of all the market participants, so that you can have the best out of it. Crossing my fingers for you, trade well, stay healthy, seeing you soon, bye bye.